having some pretty gloomy conversations about what to expect next year. It seems like a recession is everyone's call. Is that your call as well?
Yes, we do expect a mild recession next year. We expect earnings expectations to also come in quite a bit. We continue to think that the consensus expectations are too high and they need to come down into negative territory. And that's going to help keep a cap on this market. We think that this technically driven rally that we've seen over the last few weeks are going to continue to fade as we head into 2023. You just don't have that valuation support, that technical support, that's earnings support, no positioning support for the market. And so we think that this market is going to likely trade under 3,600 in the early part of 2023 before it can recover in the back half of the year towards that 4,000 price target that we have for the S&P 500 by the end of 23.
Well, a 4,000 price target, unfortunately, that doesn't really take us much higher than where we were this year. And I'm curious, Nadia, about market expectations, because it seemed like earlier this year, everyone was saying expectations were way too high, way too high. We have seen a lot of strategists ratchet down their S&P forecasts for the next 12 months. Probably right around where your general target is. But also analysts start to now bring down some of their estimates on EPS and margins and other things. And I'm wondering if that's a good sign that the folks out there on Wall Street seem to have come to terms with the idea that if we're not in a recession, we're certainly in an economic downturn that's going to have a material impact on market valuations.
Yeah, we think that that is a step in the right direction, but there's just still more to go. I mean, we've been saying since June that we thought that the consensus expectation for 23 was just too high, that 5% growth needs to come down into negative territory. I think what's happened over the last 2 years is that earnings had continued to surprise on the upside, so people got into that cadence. But reality is usually consensus numbers are always too high, and they tend to overestimate into an economic slowdown. So we think that next year is going to be a story of downward earnings revision cycle and negative downward surprises to the market.